And welcome back. It's JWalter here and hope you're having an awesome day. In today's video, I'm going to take a deep dive into mortgage delinquency rates as well as foreclosures as well. I get a lot of questions regarding, are we seeing a big increase in foreclosures now that we have the federal moratoriums not in place anymore? So I'm going to take a deep dive into this and give you all the latest information. So let's go ahead and dive right into the video right now. I'm actually going to share two reports with you guys. The first one is according to CoreLogic. They reported the most recent stats they have is for February 2022. They just released this 2 weeks ago. But I'm also going to be sharing April's stats as well. And this is according to Black Knight, which is a data analytics firm that supports the mortgage and real estate industries. So let's first talk about what CoreLogic has to say. Again, this is the most recent stats regarding delinquency rates as well as foreclosures in the US. Yes, I know this is for February 2022, but for whatever reason, there's a big lag in when they report real estate market trends in the US. So with that said, let's go ahead and dive right in the video here. So this is according to the chief economist at CoreLogic. US delinquencies dropped to the lowest level in more than 23 years. So overall, across the nation, the overall delinquency rate, by the way, these are mortgage delinquency rates, was at 3.2% in February. Also, all US states and metro areas posted a year-over-year decrease in delinquency rates as well. So as of February 2022, 3.2% of all home mortgages were in some stage of delinquency, meaning that there are at least 30 days past due, and this also include foreclosures as well. And this is actually a 2.5 percentage point decrease from February of 2021. And this national rate of 3.2% is the lowest rate in the US since at least January of 1999. So overall, across the nation, we have a low rate. However, what I most focus about is the serious delinquency rate. So that's defined as 90 days or more past due. And those include loans in foreclosure. That was actually only 1.6% in February, which basically means that all the US mortgages out there, only 1.6% are 90 days or more past due. That's actually down from the 3.7% in February 2021. Also, the foreclosure rate declined by 0.2% from 0.3% from 1 year ago. CoreLogic also tracks mortgages that transition from one delinquency rate to another. So for example, going from current to 30 days past due. So according to CoreLogic, the share of mortgages that transitioned from current to 30 days past due was only 0.8% in February 2022. Obviously, low transition rates indicate that fewer borrowers are slipping into delinquency. And current, by the way, of course, means that the borrower is paying their mortgages on time. They also list the states with the highest and lowest rate of mortgages of at least 30 days past due. And those are the following. So again, the national rate is at 3.2%. The highest share is at 5.8%, which is in Louisiana. That was followed by Mississippi, New York, West Virginia, and Alabama. The top 5 states, they have the highest share of mortgages of at least 30 days past due. And the states at the bottom of the list here were Colorado at 1.9%, South Dakota, Wisconsin, Washington, and Idaho with the lowest share at 1.6%. They also mentioned that all states posted annual declines in the overall delinquency rates in February 2022, as the employment picture was better for most states. The highest rate was in Louisiana at 5.8%. The lowest was in Idaho. Idaho actually had the strongest job recoveries in the US. In contrast, though, Louisiana had one of the weakest, though. So check this out. As of February 2022, Idaho had recovered all the jobs it lost in March and April of 2020. In contrast, though, Louisiana had only recovered 69% of jobs lost. There's also some pretty big differences when looking at the top largest US cities as well, when looking at the percent of mortgages of at least 30 days past due. So Houston was actually at the top of this list here at 4.4%. What that basically means is that out of all the mortgages in Houston, Texas, 4.4% are at least 30 days past due. In stark contrast, though, at the bottom of the list was San Francisco with only 1.7%. New York was followed by Houston, followed by Miami, Chicago, Las Vegas, DC, Boston, Los Angeles, and Denver, not too much higher than San Francisco. So again, Houston topped the list there at 4.4%. What I found to be interesting, though, is that Miami used to be at that top of that list. And it says here that Miami's rate decreased 4.9 percentage points from 1 year ago. I believe in the last report that Miami was actually in #1 spot above Houston, but now they're at #3 spot right now. Also, it said outside of the largest 10 US metros, all metros recorded a decrease in the overall delinquency rate. So it just goes to show how overall across the United States, we're seeing a decrease in the delinquency rate, obviously, which is a positive sign. However, it says elevated overall rates remain in some metro areas, including Pine Bluff, Arkansas at 9.2%, Bridgeton, New Jersey at 8.3%, and Odessa, Texas at 8.1%. At the end of this report here, they actually had a really good point to make here. So they said the nation's overall delinquency rate fell to a historic low in February, marking the 11th consecutive month of year-over-year declines. And it says here that home prices rose by almost 21% from March of 2021 to February of 2022. However, it says national appreciation in home prices is expected to cool to around 6% by March of 2023, which could cause equity gains to slow for homeowners in some areas of the country, providing less protection from mortgage defaults for those who fall behind on their payments. So that's the latest we have from CoreLogic, but I also want to share another report with you guys that's more timely. This is from Black Knight. They actually have a look at April 2022 mortgage data. So this is a little bit more timely than CoreLogic here. It says the national delinquency rate fell to 2.8% in April, down 4 basis points from March, hitting a new record low for the second consecutive month. And it says here mortgage delinquency rates are down nearly 40% from last year. Obviously a positive sign compared to 1 year ago. However, take a look at this though. So for homeowners who are 3 or more payments past due, which are defined by as a serious delinquency, those have fallen between 6 to 12% in each of the past 14 months. However, volumes remain more than 55% above pre-pandemic levels. So it goes on to say that even though we have elevated delinquency rates for serious delinquencies, foreclosure starts dropped nearly 12% from March and are holding well below pre-pandemic levels, though active foreclosures edge slightly higher. And again, the overall national delinquency rate as of April 2022 is at 2.8%. That's actually down 39.93% from 1 year ago. Also, total foreclosure starts in the US is at 21,400. That's for the month of April. That's a decrease by almost 12% compared to 1 month ago. But look at this, compared to 1 year ago, that's an increase of 478%. Not a big surprise how big this number is though, because 1 year ago, we had a foreclosure moratorium in place thanks to the CARES Act that was passed in March of 2020. And here's some other stats I want to share with you guys. So the number of properties that are 30 days or more past due but not in foreclosure is at 1.5 million. That's down from 1 month ago and also down big time compared to 1 year ago, down 1 million properties compared to 1 year ago. Also, the number of properties that are 90 days or more past due but not in foreclosure has decreased by 54,000 from a month ago, but decreased by 1.1 million compared to 1 year ago. Also, the number of properties in foreclosure for pre-sale inventory stands at 173,000 houses. That's actually up by 4,000 houses and also up by 20,000 houses from 1 year ago. And here are the top 5 states that have the highest share of non-current mortgages. So Mississippi led the pack at 6.13%, which basically means that all the mortgages in Mississippi, approximately 6.13%, are not current on their mortgages. However, compare that to 1 year ago, that's a 25.6% decrease. Also compared to the peak, which was in October 2005, look at that. The peak in 2005 or October 2005 was 23%. So basically 1 out of every 4 houses were basically not current on their mortgages back in 2005, which is pretty remarkable. Also, the all-time record low was set in March of 2000 at 5.56%. Have a look at this though. The all-time record lows were set for Louisiana, Alabama, Oklahoma, and West Virginia, all at all-time record lows of 5 to 4%. Compare that to the peak. Look at that. Louisiana, October 2005 at 30.43%. Pretty remarkable. Now it's only at 5%. Alabama, the peak was at 14% in 2010. So in other words, the levels we have right now are far below the peaks we saw back in 2005 and also in 2010. In stark contrast though, here are the top 5 states that have the lowest share of mortgages that are not current. In other words, the highest share that are current. Montana led the pack at 1.94%, followed by California, Colorado, Idaho, and Washington at 1.67%. And also, here are the top 5 states that have the highest share of mortgages that are at least 90 days past due. Mississippi led the pack at 2.55%, but look at that difference between 1 year ago. Actually, for all 5 states here, compared to 1 year ago, that's down 52.41%. Also, the all-time record high was at 10%. So 1 in every 10 houses back in December 2005 were at least 90 days more past due on their mortgages. Pretty crazy. Louisiana was at 2.37%. That's down from the peak of 13%. Alabama at 1.77%. That's a decrease of 54% from 1 year ago. The peak was actually in January 2010 at 5.5%. So comment below with your biggest takeaways from today's video. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you have an awesome day, and I look forward to seeing you on the next video.